Hello, welcome back. Later on, I'll be talking to a senior policy advisor from Christian Aid. But first, more from the film, Insuring Against Famine.
The World Food Programme is planning to insure vulnerable Ethiopian farmers against drought so that cash for food is available at the time it's needed. But it's not just the farmers who will benefit. It's also better for aid organisations to have access to resources as early as possible. Rushing mountains of food to starving people to keep them alive is expensive. The earlier the money arrives, the cheaper it is to deliver what's needed, and you won't end up providing for destitute families indefinitely.
The 2002-2003 response was as good as a traditional response as it gets in Ethiopia, and very few people died as a result of what was the second worst rainfall year in recent history. But at the same time, somewhere between 1 and 2 million more people fell into destitution. And those people now have become wards of the government and of the international community, which is, leaving aside issues of dignity we just touched upon, is just a terribly expensive proposition.
The ideal one is 55 million and above.
But first, you have to get a company to take on the risk and guarantee the payout. Dr. Joe Soroka has the job of creating a contract which will quantify the farmer's risk in a way that can be used and trusted by financiers in high-rise offices on the other side of the world.
For each of the microclimates. Everyone around the world knows what a millimetre of rainfall is. So 1 millimetre of rainfall here in Addis means exactly the same as 1 millimetre of rainfall in New York or in London.
International finance is wary of developing countries like Ethiopia because it requires high-quality data and a lot of it. But rainfall data is internationally recognised, and Joe is sure that Ethiopia has the capacity to fulfil international demands. She's here in Zawai to meet the local meteorologist.
Nice to meet you. You're doing a very good job.
There are many other risks that a farmer faces: pests, fertilizers, bad seeds, but drought is the biggest one. And there are many ways we can correlate rainfall that happens in the station to the production a farmer expects to get on his field.
Zawai Weather Station is one of 26 the team chose to provide data for their initial pilot scheme. It's one of the better ones in Ethiopia, and the meteorologist does provide reliable rainfall data. The contract stipulates data has to be collected every day at exactly 9 a.m.
This is for Addis Ababa Bolil. It begins from 1954. So this is the oldest one.
At the Meteorological Agency's archives, there's more crucial information. The records go back 50 years, and just like any car insurer checking your previous claims, this detailed archive is used to assess the probability of an extreme weather event and help them calculate the premium.
We have about 1.8 million charts. We have also about 3 billion station observations, which has been collected since half a century ago.
Commercial farmers in Ethiopia, like this large-scale cattle farmer, can afford to take out insurance premiums on an individual basis, but the majority of farmers can't. For them, food handouts have always been like a last resort insurance. But is it acceptable to rely on this last-minute begging bowl culture?
Insurance is there to help you deal with risks that don't happen often. When they happen, are really important and dangerous to you. We've made promises to essentially assist these people, and we should really make good on that promise. And I think one way of doing that is making sure we manage our risk appropriately for us to do that.
Back in Europe, the contract is ready, and the team have presented it to the international insurance companies. Nothing like this has ever been done before, so they were unsure of the outcome. In fact, 6 international finance houses offered to take the risk. In the end, AXA won the contract. So is this the start of a new form of humanitarian funding?
From I think the positive response that we've got so far, and the details of the response, the terms and the tender that we have, yes, I think so. I think I can be very optimistic.
For Richard Wilcox, it's been an achievement to prove that the international financial market will take on the risk of some of the world's most vulnerable people. But this is only one of many tools he plans to use to bring even greater efficiency into the humanitarian aid world.
It's our responsibility in trying to make the most out of the funds that the donor community is able and willing to make available for beneficiaries to essentially have a relentless search for innovation of what can we do to make this work better, and for that we should be tapping into the most advanced services and tools we can find.
Richard's team are looking to the future. They've started the ball rolling on behalf of the world's poorest. Now they hope that the ideas they're piloting will bring an end to the begging bowl and ad hoc nature of aid provision for vulnerable peoples worldwide.
I'm joined now by Andrew Pendleton, who's a senior policy advisor for the aid agency Christian Aid. Andrew, people watching this might think that discussing humanitarian disasters and famine in terms of corporate finance and insurance is a bit distasteful, if not paradoxical. Where do you stand on that?
Well, I mean, it does sound strange. It does sound like something of a contradiction to talk about the big financial markets in relation to aid. But I mean, if we're to crack this problem of global poverty, which still affects a huge number of people on the planet, then that's where all the money is. All the money is tied up in the big, rich financial markets, and this is perhaps one interesting attempt to tap into that, to get hold of it.
What is interesting about it as a proposal for you, this idea of insuring oneself against humanitarian disaster or famine or adverse weather conditions?
Well, as a development agency, Christian Aid and the others face one single problem, really, which is convincing the world when something is looming to dip into their pockets and give money. And that's most acute when we're actually talking to governments, to the rich countries' governments, and trying to convince them to give government assistance in that kind of instance.
Because it's something they haven't seen on their TV screens as yet, or on the front pages.
And it hasn't generated that public will that needs to get in behind to give governments the confidence to do it, I suppose, in a sense. So what this is an attempt to do is to make, when that really big one hits, is to forecast that and have a kind of automatic flow of cash which comes in the form of insurance. I suppose our concern is that it's actually not a massive amount of money that will flow as a result of this. It certainly isn't enough to deal with a whole of a sort of 1984 scale or even a 2002 scale famine in a country like Ethiopia. Plus the fact that in the years when there's not one of those famines, you've got a lot of money coming out of the country.
Well, that's the problem, isn't it? Because there are weaknesses in it as a proposal and as a system, because when there isn't a disaster looming, when thankfully there are good years, a lot of money is going from a very poor country, Ethiopia, to very rich multinational insurance companies.
Exactly, and it operates on the same basis as you and I pay our insurance premiums. We hope that the worst won't happen, and we're willing to pay money year on year against that. Now, that's fine, except that in this case you're talking about what's effectively $1 million premium per annum, certainly in this kind of pilot year, in the first year, which is quite a lot of money in the Ethiopian context, and certainly money that might be better spent on building up people's resistance, so that when a big famine or drought comes along, actually they're not knocked over by it so easily, and they actually have more kind of ability to cope with it.
It requires a big cultural shift on the parts of people like yourself in the sort of development and aid community, and I suppose in the guys working on Wall Street or wherever else. It's not a marriage that comes to mind, is it?
It's not necessarily a match made in heaven, no. I mean, you've got big kind of cultural shifts required. I think the United Nations, it's interesting this is coming from the kind of UN family, because, that you would say that was part of the aid community that was probably least likely to put this forward. But, so it's interesting that it's coming from that. I think we do have to find a way of tapping into that kind of money, the money in the rich financial markets, but in a way which is kind of responsible. And the big problem, I think, is the expectation of investors, because what they want is big returns. Now, I think, actually, investing in poor countries, markets can probably get returns out of that, but only over a longer period of time and smaller returns than investors are used to getting out of, the big investments they're likely to make. So there is potential in that notion of getting money out of those financial markets to tackle the problem of poverty, but I'm not sure this is necessarily the idea.
Part of the problem, presumably, also, is that looking at it from a wealthy investor on Wall Street's point of view, is that you're much more likely to stay clear of certain countries and certain areas than others.
And they may be the places that need it most, absolutely, and you need a kind of reasonable amount of certainty that you're going to get some return. But maybe that provides an incentive for some of the countries that are able to become more, to be able to offer that confidence to investors. Maybe that becomes an incentive for them if that money is available.
Can you, I mean, from your own personal point of view and your experience, can you see this being something that, you know, people catch on to and spreading?
I mean, it certainly seems to be part of the World Food Programme's thinking to try and extend this to other countries. And I think one of the really good things about this is that it's really embedded a fantastic early warning system, or it seems to have done in Ethiopia now, where they're using all the data that they have from
the weather centres.
Weather centres, I think there are about 16 around the country. They're using all that data, which is fantastic, because farmers need that, I mean, wherever they are, but particularly in the developing world, they need that kind of data to make decisions about what they grow and when they grow it. And I think that's probably one of the biggest contributions this project is making. As for the insurance, I really think it needs to be tested as an idea, and that was, I think, the World Food Programme's intention in this. But what I think we need to look at much more is dealing with the underlying causes of poverty. So actually tackling the root causes rather than, I mean, we do have to respond. There will always be humanitarian crises, but actually we could lessen their impact by tackling the root causes of poverty in the meantime.
Andrew Pendleton, Senior Policy Advisor for Christian Aid, thank you very much for joining us. That's it for now, but join me next time for another edition of Witness.